G'day, I'm Andrew Lovett, and today we've got three topics which are election promises from the government and the opposition to improve the tax circumstance. Firstly, for a number of years we've had what they call an instant write-off, where a small business buys an asset less than $20,000. It can immediately expense that asset rather than having to depreciate it over time. The government has promised to increase the threshold from $20,000 to $25,000 and to extend that write-off for another year through to June 2020. That's a good thing for small businesses. The Labor Party had previously promised a similar sort of tax benefit that they're calling the Australian Investment Guarantee. That'll be available for all businesses that operate in Australia, whether they're large or small, and it's available for tangible plant and similar assets, not for buildings, but also for intangible assets like patents or copyright. The Australian Investment Guarantee will allow those businesses to write off the first $20,000 that's part of the cost of acquiring, I guess, a fairly large asset, and then to depreciate the rest of the cost in accordance with the normal depreciation rules that apply for those sorts of assets. That's a good thing, and it's got broader application to large and small businesses, and it's specifically designed to increase business investment in Australia, which is lagging a little bit. The third promise, which has come from the government, which I think is a pretty good one, is in relation to financial reporting for large proprietary companies. A large proprietary company has been defined as a company that meets 2 out of 3 tests. The 3 tests are that the revenue of the company is above $25 million per year, or any subsidiary companies are added into that the gross assets of the company or group are greater than $12.5 million, or that it employs 50 people or more. If you meet any 2 out of those 3 tests, then you're a large proprietary company. You have to have your financials audited, they're lodged with ASIC, and they can be searched by your competitors. What the government has announced, what the Treasurer has announced, is that they'll double those thresholds. So the threshold for revenue will go to $50 million, the threshold for gross assets will go to $25 million, and the threshold for the number of employees will go from 50 to 100. So that's going to mean that about 2,000 companies that were previously designated as large proprietary companies will no longer fit into that category and won't have to have their company accounts lodged with ASIC. That's a big cost reduction. The government suggests that it's circa $80 million in costs over the country, and it's a big competitive advantage not to disclose your financial statements to your competitors. That's another tax insight from Lovett's. If you'd like more information, go to our website or give us a call.